I need to tell you something about your bank account that most people won't hear until it's too late. I've dealt with banks my entire career, borrowed billions, negotiated with some of the largest financial institutions on earth. Um, I understand how they think, how they operate, and what I'm seeing right now, the mechanisms being put in place, the legal frameworks being constructed, they're not about protecting your money, they're about taking it. And seniors are the primary target. Let me start with something most people don't know. Um, your bank account isn't actually yours legally. Um, when you deposit money into a bank, you're not storing your property in a vault. Um, you're making an unsecured loan to that institution. The bank owns that money. They owe you a debt. That's the legal relationship. And if you think that's just technical jargon that doesn't matter, you're about to find out why it matters more than almost anything else in your financial life. Because the laws governing what banks can do with dormant accounts, with accounts they claim are inactive, with accounts belonging to people they determine are incapacitated, those laws are changing right now, and not in your favor. Here's what's happening. In multiple states, new legislation has been passed in the last 18 months that redefines what constitutes an inactive or abandoned account. Used to be, you had to have zero activity for 3 to 5 years before a bank could even start the process of escheating your funds, which means turning them over to the state. Now, in some jurisdictions, it's as short as 12 months. And the definition of activity has been narrowed significantly. Automatic deposits don't count anymore. Social Security, direct deposit, not activity. Pension payments coming in, not activity. The only thing that counts as activity now is you personally initiating a transaction, logging into online banking, making a withdrawal, writing a check that clears. And if you're a senior who doesn't use online banking, who doesn't write many checks, who relies on automatic payments for everything, you could have $100,000 sitting in your account and the bank can declare it dormant. Now, here's where it gets worse. Once your account is classified as dormant, the bank doesn't have to notify you immediately. Some states require notification, some don't. And even in states that do, the notification is often a single letter sent to your address of record. If you've moved to assisted living, if you're in the hospital, if your mail is being handled by someone else, if the letter gets lost, you never see it, and the clock keeps ticking. After a certain period, which in some states is now as short as 6 months after that initial notification, your account gets turned over to the state's unclaimed property division. At that point, the money is gone from your bank account. The bank has already moved it, the state has it, and now you have to go through a bureaucratic nightmare to get your own money back, if you can even prove it was yours, because the burden of proof is on you, not them. Let me explain what this looks like in practice. I've heard stories directly from people. This has happened to a woman in her 70s. Husband died. She stopped using their joint account because it was too painful. Everything was on auto pay, Social Security going in, bills going out. She never logged in, never checked the balance, didn't need to. Everything was automated. 18 months later, she gets a notice from the state saying her account had been escheated. Over $60,000 gone. She calls the bank. They say, sorry, we sent you a letter. She never received it. They say, that's not our problem. She calls the state. They say, you have to fill out these forms, provide proof of identity, proof of residence, proof that the money was yours. She's elderly, she's grieving, she's overwhelmed. It takes her 9 months to get the money back. And during that time, she's living on a fraction of what she should have. That's not an isolated case. That's happening thousands of times right now across the country. But here's what nobody's talking about. The part that should terrify you. There's a second mechanism being implemented that's even more dangerous. It involves power of attorney and guardianship laws. If you become incapacitated, if the court determines you're no longer competent to manage your finances, someone else gets control of your accounts. That could be a family member, that could be a court-appointed guardian, and the laws around what those people can do with your money are shockingly loose. I've reviewed cases where adult children with power of attorney drained their parents' accounts completely, legally, transferred everything to themselves, claimed it was for the parents' care, and by the time anyone questioned it, the money was gone. And here's the thing, banks don't care, they're protected. If someone presents valid power of attorney documents, the bank will give them access. They're not required to investigate. They're not required to verify that the person is acting in your best interest. They're required to follow the legal paperwork. That's it. Now, combine these two things, dormant account laws that are increasingly aggressive and power of attorney laws that give other people control over your finances with minimal oversight. You see where this is going? There's a mechanism in place now where seniors can lose access to their money either through bureaucratic classification as abandoned property or through legal guardianship structures. And there's almost no recourse. And I want to be very clear about something. I'm not saying there's a conspiracy where banks and government are actively colluding to steal from seniors. What I'm saying is worse. I'm saying the system has been designed in a way where your money is not protected, and the people who designed the system know exactly who will be affected most. People who are elderly, people who are sick, people who are isolated, people who don't have family members actively monitoring their finances, those are the people who will lose everything. Let me tell you what most people don't understand about FDIC insurance. Everyone thinks their deposits are insured up to $250,000. That's true if your bank fails. But if your account is escheated, if it's turned over to the state as unclaimed property, FDIC insurance doesn't apply. That's not a bank failure. That's a legal process. Your money is still somewhere in the system, but you don't have access to it. And the insurance that you thought protected your deposits doesn't cover this scenario. So if you have significant savings and your account gets classified as dormant, you could lose access to everything and the FDIC won't help you. That's a gap in protection that almost no one knows about until it happens to them. Here's another thing. Automatic bill payments don't stop when your account is escheated. The state doesn't take over your financial obligations. They just take your money. So if you have automatic payments set up for your mortgage, for your utilities, for your insurance, and your account gets turned over to the state, those payments stop and you start getting late fees and penalties. And eventually your services get shut off, your insurance gets canceled, your credit score crashes, and you're sitting there wondering what happened because nobody told you. Nobody warned you. The first indication you have that something is wrong is when your electricity gets shut off or you get a foreclosure notice. By then, the damage is done. Now, I'm going to tell you something that's going to sound extreme, but I need you to understand how serious this is. There are financial advisors right now who are recommending that seniors intentionally create activity in their accounts every single month. Not because they need to, not because they want to, but as a defensive measure. Log into your online banking, transfer $1 from checking to savings, transfer it back, that counts as activity, do it every 30 days, keep a log of it, screenshot it, because if your account ever gets challenged, you have proof that it wasn't dormant. That's what it's come to. People having to game the system just to maintain access to their own money. And if you think that sounds paranoid, I need you to understand something about how I think. I build rockets, I build electric cars, I build systems that operate on razor-thin margins where a single point of failure can destroy everything. And when I look at the financial system right now, I see multiple points of failure specifically targeting seniors. And nobody's talking about it. Let me address something else. Digital banking, everyone's being pushed toward it. Banks are closing branches. They're eliminating in-person services. They want everything done online or through apps. And for seniors who didn't grow up with this technology, that's a massive problem. Because if you can't access your online account, if you don't know how to use the app, if you don't have a smartphone, you can't create the activity the system now requires to keep your account from being classified as dormant. You're being forced into a system you can't navigate. And the consequence of not navigating it is losing your money. That's not a coincidence. That's a design choice. They want fewer people able to maintain active accounts because dormant accounts generate revenue. When money gets escheated, when it goes to the state, that's a transfer of wealth from individuals to government coffers. And banks don't lose anything in this process. They're protected. They follow the law. The only people who lose are you. Here's what's going to happen in the next 2 years if nothing changes. You're going to see a massive increase in seniors losing access to their bank accounts, not because they did anything wrong, not because they were irresponsible, but because the legal framework now makes it incredibly easy for that to happen. And you're going to see adult children and court-appointed guardians draining elderly people's accounts legally through power of attorney mechanisms. And you're going to see banks shrug and say, we followed the law. And you're going to see states say, this is unclaimed property, we're just managing it. And millions of seniors are going to be financially devastated. And most people won't even realize it's happening because each case is individual. Each case looks like an isolated incident. But when you step back and look at the system as a whole, you see the pattern. This is systemic. This is by design. Now, let me tell you what you need to do. First, make sure your contact information with your bank is current. If you've moved, if your phone number has changed, if your email has changed, update it immediately, because when they send that notification about your account being dormant, you need to receive it. Second, create activity in your account every single month. Log in online, make a small transfer, do something that the system recognizes as activity initiated by you, not automatic, not passive, active engagement. Third, if you have a power of attorney, make sure it's someone you trust completely and make sure there's oversight. Have a second person who reviews your bank statements regularly, someone who will notice if money starts disappearing. Fourth, keep your own records. Don't rely on the bank. Print your statements. Keep them in a safe place, because if you ever have to prove that money was yours, you'll need that documentation. Fifth, consider using multiple smaller accounts instead of one large account. Spread your money across different institutions. That way, if one account gets frozen or escated, you still have access to funds elsewhere. It's more work, but it's protection. Sixth, and this is critical, talk to your family about this. Make sure your children, your siblings, your close friends know where your money is and how to access it if something happens to you. Not because you're giving them control, but because if you become incapacitated, if you end up in the hospital, if something happens where you can't manage your finances temporarily, you need someone who can step in and protect your accounts from being classified as dormant. That's not paranoia. That's basic financial protection. Seventh, if you don't use online banking, you need to start. I know that's hard. I know it's intimidating. But the system is being built in a way that punishes people who don't engage digitally. Find someone who can teach you, a grandchild, a neighbor, a librarian, someone patient who can walk you through it, because your financial security now depends on your ability to navigate these systems. And finally, if you hear about this happening to someone you know, help them, guide them through the process of reclaiming their money, because it's complicated, it's bureaucratic, and it's designed to make people give up. The state is counting on a certain percentage of people not fighting to get their money back. Don't be part of that percentage. Fight for every dollar. This is your money. You worked for it. You saved it. You have every right to it. And no bank, no state agency, no bureaucrat should be able to take it from you just because you didn't jump through their arbitrary hoops. Here's something else you need to understand. The timing of all this isn't random. We're heading into a period of economic instability. Inflation is eating away at savings. Interest rates are fluctuating wildly. Banks are under pressure. And when financial institutions get stressed, they look for ways to shore up their balance sheets. Dormant accounts are low-hanging fruit. Money sitting there that nobody's actively monitoring. Money they can move off their books through legal channels, and nobody complains until it's too late. And state governments are facing budget crises, pension obligations they can't meet, infrastructure that's crumbling, social programs that are underfunded. Unclaimed property divisions have become revenue generators. They're not just holding your money temporarily, they're using it, investing it, earning returns on it. And when you finally come to claim it, they give you back the principal without interest in many cases. They've been using your money for free. That's not financial stewardship, that's theft with legal cover. And I want you to think about the broader implications here. If banks and governments can collaboratively create a system where your money can be taken simply because you didn't log into an app frequently enough, what else can they do? This is about precedent. This is about normalizing the idea that your property isn't really yours unless you're constantly defending it, that your savings aren't secure unless you're actively proving ownership on a regular basis. That's a fundamental shift in how property rights work in this country. And it's happening quietly, through legislative changes nobody reads, through banking policy updates nobody notices, until one day you go to access your money and it's gone. And when that happens, you'll remember this video. You'll remember that someone tried to warn you, and you'll wish you had taken action when you still could. Don't let that be your story. Comment right now, say, I'm protecting my account. Let me know this message reached you. Share this video with every senior you know who has a bank account, which is all of them. Subscribe, because I'm going to keep exposing the systems that are designed to exploit people who can't defend themselves. And check the description for a guide I've put together on protecting your bank accounts from seizure. You were meant to see this today, not tomorrow, not next week, today. Because the longer you wait to act, the more vulnerable you become. And I'll see you in the next one.